Okay, well, hello everyone. Thank you so much for joining us today. My name is Ileana Perez, and I'm Entrepreneurship Initiatives Manager with E4FC. And we're really excited to be doing webinar number 4, which is building credit and accessing financial capital. And today we have a guest presenter, Carla Enriquez, who's a Client Success Manager with Mission Asset Fund. So I'll get an opportunity to talk a little bit about Carla, and then Carla will share a lot more about the work that Mission Asset Fund is doing to support small businesses. But before we get started with the presentation, I do want to remind everybody that Immigrants Rising is a new initiative to promote entrepreneurship opportunities for all immigrants, regardless of legal status. So we've been doing a webinar series that started in March. And as you can see, we've done an introduction to working for yourself, ITINs, EINs, and taxes, choosing a business structure. And then today is webinar number 4. And we are planning a couple more webinars focused on business plans and supporting your entrepreneurial family. And as a reminder, all the webinars have been recorded, and I have been sending the link to the shared folder that includes all the recordings to all the webinars and some handouts as well. So if you have not received that, please let me know so I can send you the link to that. And now a little bit about the wonderful Carla Enriquez. Let me pull up my notes. So Carla has been working with Mission Asset Fund, providing financial education for 2.5 years. And Carla also previously volunteered with E4FC as an outreach ambassador and graduated from San Francisco State University with a Bachelor of Arts in Latina Studies. In addition to that, Carla is soon to be headed to Columbia University to pursue graduate studies. She's about to pursue her master's in public administration at the School of International and Public Affairs. So thank you so much, Carla, for joining us today and sharing a little bit about the great work that Mission Asset Fund is doing. So without further ado, I'll go ahead and hand it over to you. Thank you.
Thank you, Lana. I'm really excited to be doing this webinar and participating in the Immigrants Rising initiative, because it's really exciting to see all the great work that E4FC is doing. So I'm really excited to be here today. So we're going to get started with the presentation and talk a little bit more about who we are, who Mission Asset Fund is. So Mission Asset Fund is a nonprofit organization in the Mission District of San Francisco, as our name says. We are in the, our purpose is to create a fair financial place for hardworking families. And what does this mean and how does this look like? We actually did a study with residents of the Mission District that found that 44% of the people in the Mission District did not have a credit score or were credited in this pool. And this makes it really hard, especially for families, to get ahead, to find affordable loans, to find ways to own assets. So we started our programs in order for our families to have access to affordable credit and to start their credit histories here in the US to have better opportunities in the future. So again, one of the things that I think it's something that I have to always think about is like, what is credit and why does it matter? So credit, it's a very, very interesting topic. It's really defined by all these companies, all these private companies. And to get started, let's think back about how does our families usually make we'll make payments back in our home countries. So I grew up in El Salvador. I migrated from El Salvador when I was 11. And I actually would go with my grandma to buy fruits and vegetables and things to the neighborhood store. And every time she would go to the store, she would say, put it on my tab and I'll pay it later. And people will actually do that because people trusted her, because she was very known, and eventually I believe she paid back. But it was something that people really, really trusted my grandma. So think about it now with credit. Unfortunately, if my grandma moved to the US, she wouldn't have the same credibility that she did back in my home country. So that is where credit history and credit reports come. So there are 3 credit bureaus, which are Equifax, Experian, and TransUnion. And basically, those 3 bureaus, what they do is that they create like a resume of how you have paid back all those loans that you have acquired in the past. With that information, they send it out to FICO, and FICO is the Fair Isaac Corporation. So if you have ever gone out to ask for a credit card or a loan, this is the one thing, the key thing that they look at when they're looking at your credit report and credit score. So the credit score is the FICO score, and this ranges from 300 all the way to 850. And the closest you get to 850, the best products that you can apply for, and also the better, the lower your interests are gonna be on those loans. Aside from that, you're also gonna hear a lot about Vantage Score, scores. So if you have ever seen apps like Credit Karma, like NerdWallet, like Mint, all of these are now offering free FICO scores or Vantage scores. For example, Credit Karma gives you a Vantage score. Vantage score is a little different from your FICO score. Not a lot of lenders look at your Vantage score, so take your Vantage score more as a guideline of where you are if you do have access to these apps. Now, when they're talking about your FICO score, what does that mean? So basically, they don't really give us an idea of, okay, I'm paying everything on time, and every time I make a payment on time, I'm gonna get 10 points. They don't say that to us. FICO has like this formula that they created that they actually don't share with us. What they do tell us are the guidelines that you should use, and more so what goes into your credit score. So the most important part about your credit score is your payment history. And this basically means, are you making your payments on time? So one of the things that I tell my clients to always make your payments on time. Even on your telephone bills, even on your Comcast bills or cable bills, make sure that you are always making those payments on time. Your payment history is 35% of your FICO score. So if you make a late payment, it can be very detrimental to your credit history. Late payments stay on your credit report for 7 years. So it is really important to make sure that you keep up with those. The second part that is very important about your credit score is the amounts you owe. So if I'm looking at someone's credit report and I'm the bank, and I see that they have a lot of unpaid debt, that might raise a red flag for me. Another important aspect of this 30% is what you are using on your credit cards. So for example, if I have $1,000 credit limit on a credit card, the amount that I should be using is less than 30% of that $1,000. In this case, it would be $300. And what that means is that I can use the $1,000, but if I use the $1,000, I'm using 100% of the available credit, and that will affect my credit history negatively. It would lower my credit score, and maybe other lenders might not want to let me borrow money if I still owe too much on my credit cards. So one thing that I recommend is make sure that you try to use less than that 30%, and if possible, pay off your credit card at the end or before the cycle closes. The next part is the length of credit history. And this is also important because it determines, that you have been using your credit for a long time, that you're responsible, that you have been making payments for a long time. So the sooner you get started with your credit, the better. So because a person that has been having a credit history for 10 years can say a lot more to the creditors than a person that might just have started a year ago. The next part is new credit. And a lot of people actually had told me, I applied to 3 credit cards at once and they all denied me. So be very careful and be very purposeful whenever you're looking for new credit. Try to be very mindful that every time that you apply for a credit card or a loan, you do get an inquiry in your credit report. So try to limit the search of new credit to 1 every 6 months, at least if you really have to, once a year, or just really when you need it. If you look for credit too close together, this can also affect your credit report negatively, because again, it shows the lenders that there's, why does this person need so much new credit? What is going on in their financial lives? And the last part of your credit score is the types of credit used. So the lenders also want to see that you can manage different lines of credit, so that you can manage and budget for an installment loan, which is a loan where you are making payments, the same amount of payments every month, versus a credit card where you can maybe spend 100 one month or 200 the next. So they want to make sure that you know how to manage your money wisely, and you can show a lot through your credit history. So these are the main things that they're looking for. But one thing that is very important is to also check your credit report. And as you can see, there's various forms of checking your credit report. And one thing about your credit report, you have access to a free credit report once a year from the 3 credit bureaus. A lot of people think that if you check your credit report this way, it's going to negatively affect your credit history, and it's not. You actually, as consumers, again, have access to a free credit report once a year, every year. So make sure you get in the habit of doing this. And you can do it, if you have a social security number, you can do it these 3 ways: by visiting annualcreditreport.com, by mailing in the request form as pictured here, and Ileana, we will actually be providing that form in the follow-up email, or by calling the number on the screen. If you do not have a social security number, you can still check your credit report, but you will have to mail in the form, the annual credit report request form, and just leave the social security number blank. The one thing that they are going to search you with is your name, your address, and the date of birth. So make sure that if you want to get the 3 of them at the same time, that's great. Or you can space them out from maybe Equifax at the beginning of the year, Experience mid-year, and TransUnion at the end of the year. And one thing, once you get that credit report, it's very important to check your credit report for different items. One, let's say that you are trying to look for a loan and you want to apply for it. One thing that you can do is really be mindful of what's your credit score, if you have access to that. Then make sure that what you are requesting makes sense to what you want to buy. But again, when you get that credit report, you're gonna see different types of lines of credit if you have some available. What you wanna look out for is make sure that your name is spelled right, that there's not someone else's name on your credit report, that your date of birth is right. If you have a social security number, that your social security number shows up correctly on your credit report. If you don't have a social security number, that part should be all zeros. It should show up, or should show up as blank, where it says social security number. Now, your credit report is composed of, again, your name, address, date of birth, and it will give you the reasons of why the credit score is what it is. When you get your credit report through annualcreditreport.com or through the through the form, you're not going to get your credit score, but it's really important to make sure that you are reviewing everything on your credit report. You're going to get all the lines of credit that you have requested in the past, even if they're positive or negative items on your credit report. And usually the credit bureaus are going to separate them by that, by things that might be negative on your credit report and things that have been paid on time. So this is, it kind of looks like what you see on the screen, but actually you will see so much more information on your credit report when you do check it. So you're gonna see how much is your credit limit on credit cards, how much is the balance on the credit cards, when did you open it, if it's closed, when was the last time that was reported, etc. Aside from that, it's gonna show when every time you have made a payment and if that payment was late or not. After you see all of your credit history, meaning your lines of credit, you're gonna see a part where is public records, and that's if there's taxes owed or any bankruptcy. That's gonna show up at the end of your credit report. And towards the end of your credit report, you're gonna see inquiries, and that's where you're gonna see every time that you apply for a credit, for new credit, it's gonna show up there. And again, it's really important for you to limit those to once a year, if possible, to prevent that from affecting your credit score. Next slide. So again, one of the things that lenders are looking for when you are building your credit, or when you are borrowing money from them, is your credit. They want to make sure that, one, you have credit, that two, you're able to make those payments, and that's where the capital comes from. That you have liquidity, meaning what do you have assets that you can make into money right away in order for you to pay back that loan. Some lenders will ask for collateral. This means that you have something to back up your loan with. And they're also going to look at your character. And this can be determined by your credit report. Unfortunately, they will say, well, has this person been responsible or not with their credit, etc. So one thing I do want to mention is to make sure that your lender is a responsible lender. And you will see a lot of different companies out there that are going to offer you money. You have a growing market of online lenders that can offer you, we're gonna lend you $25,000, no questions asked, which is great. Let me apply, why not? But once you read the small print, you're gonna see that their interest is extremely high. Some of these are payday loans. And if you guys have heard, payday loans are what we call in this world of finances, predatory lenders. So I want to be mindful that you all don't fall trap to those lenders, because they can charge up to 400% of interest once you look at everything that you pay with fees and interest. So whenever a lender is a responsible lender, usually they ask you for income, for proof of income, and to make sure that you will be able to actually pay back that loan. The less questions they ask you, the more hesitant you should be about applying to that loan. The same with title loans for your cars, or also other lenders out there online that are charging very high interest. And I'm aware that sometimes there are emergencies, but really try to not use those services, because they can be very, very expensive. And again, as a borrower, there are also options for you. Make sure that you're borrowing the right type of loan. make sure that you are looking at the terms and conditions for the loan, because I'm not going to ask for a personal loan if, let's say, I want to buy a car, because that's going to be very expensive. Make sure that you understand the interest rate and the APR and any starting fees that this lender might request. And any other fees like late fees, how much I will have to pay for that. And one thing that I always also want to remind our clients is make sure that they explain things to you in a clear way and that they have a great customer service. If not, make sure you are like any other client. Make sure you can always take your business somewhere else if they have been mean to you. So make sure that they treat you with respect everywhere you go. So now let's think about it. So now I know you have been talking about how to check your credit, what lenders look for, and what things you should look out for when you're borrowing money. But you might be like, well, yeah, Carla, I have been trying to get credit, but no one wants to approve me. So this might be two products that you might consider when building credit. Again, remember that the most important part of your credit is that history of payment. So these two products are doing that, creating that history of payments that you need to build your credit score. So here at Mission Asset Fund, we offer what we call lending circles. Lending circles are a zero interest social loan. So what we have done, we have taken a community practice where people come together and lend and borrow money from each other, and we have formalized it in order for people to build their credit in a safe way. And because all transactions are debited from people's checkings account, everyone goes through an approval and application process. And if someone misses a payment, we step in instead of them in order for no one in the circle to lose any money. And the most important part of our program is that we are reporting every payment that a person makes to the 3 credit bureaus. We work with a lot of individuals who have not had any credit in the past. And we have seen that from having no credit, they usually end with about a maybe 600 credit score after joining our program, and that's on average. So it can vary from client to client. But the way that it works, let's say that you are in a circle with 10 people. So as you can see, there's 10 people in the circle, and everyone decides to contribute $100. So every month, we debit from their checking account the $100 that they need to contribute to the group. And we collect a total of 1,000 that go to a different person every month until everyone in their circle gets a chance in that 10-month cycle to receive their funds. And again, it's zero interest, so a lot of people use this to pay off debt. A lot of our clients use it to invest in their business. If they need inventory or they need new equipment, they can use these funds for that. There are small loans. The idea is to be the first step for you to build your credit. They can be from $600 all the way to $2,400, and the amount that you receive depends on the number of people with you, which can be from 6 to 12. So again, if there's 10 people and everyone wants to contribute $200, then you will get a total of $2,000. The other thing about our program, aside from that being an interest, we don't run your credit. We do work with a lot of individuals who don't have any credit. So again, we want to be that first door for them to build their credit. So this is a great way for you to build your credit history and that history of credit needed to have a credit score. So if you're interested in joining our program, you can start an application through lendingcircles.org. We offer this program all through California, but also we have partners in 17 states and DC who offer our Lending Circle program. And they do it through their organization, and a lot of them also provide financial coaching or also work with small businesses to grow their business. So if you are near a provider, go ahead and check us out and see if you would like to join. So if, let's say, there's not a provider near you to join a lending circle, another way that you can build your credit is through a secure credit card. Now this you can access through some banks or credit unions. So I will suggest that you check in with your bank or a bank in your neighborhood to see if they provide secure credit cards. So what they are basically is a way to start your credit with your own money. Again, the way that they work is that, let's say that I had $300, I'll give it to the bank, and that's gonna be my starting line of credit. What I'm gonna do to build my credit, use my credit card, my secure credit card, pay off what I borrowed, and do that every month so I can go ahead and build my credit. The bank, in return, should be reporting those payments to the credit bureaus. And after a year of me using that credit card or secure credit card, what they do is they give you back the funds, and they convert this credit card into a regular credit card. So again, you are paying interest. So just make sure you keep up with your payments and make sure that you pay everything on time to build a steady credit history. So now let's talk about a little bit about your small business. So again, a lot of the times, if you are just starting off your business, they're gonna look at your personal history to lend you funds. And there are some nonprofits and government agencies that are already providing access to capital for businesses. One of them is the Small Business Administration. There are several chapters all over the US, so look for the one near you, and they're usually well connected with other nonprofits or other organizations that work with you in order to fund your business. So, and you can look at them online through sba.gov for you to access their services. They also have technical assistance aside from that, and workshops that you can access. For those of you that might not have a social security number, you can still access their services, but their loans will have to be co-signed by someone with a social security number, so that's another option. And aside from that, you can also use, again, like I said in the previous slide, you could use lendingcircles.org as another way to access money for your business. Once you start growing your business, there's also another side of credit, which is your business credit. And this can also be determined not only by the payments that you're making as your business grows, but also how do you pay. Let's say that I have a grocery store. This credit can be also built through the companies that I pay for the products, etc. So as your business grows, you can also consider growing your business credit. But if you're starting off, you can start off first by building your personal credit, and then start building the next step will be to start building your business credit history. So other handy resources to remember are a lot of agencies, federal and nonprofits, that can connect you with different nonprofits around the US. I know that not everyone that might be on this webinar might be in California. So I would recommend that you check out some of these organizations to find small business organizations around you. And another great resource is the Consumer Financial Protection Bureau. And I want to connect you with those, and I hope that this administration does not cut the Consumer Financial Protection Bureau, because they're a great resource. They actually the organization that sued with Wells Fargo because of their mixed practices. and got money back for the clients. But they have a wealth of information, of resources, of financial education, of guides that you can use and learn more about credit and building your credit. The same with the Federal Trade Commission. If you work in an organization that provides financial education, they can provide you with free resources or handouts that you can give out to individuals. So there are two great organizations to learn more about credit history. Also, if you have a complaint about a financial product, let's say that for example, like my bank opened a checking account under my name and I didn't know about this. I can actually let the Consumer Financial Protection Bureau know, make a complaint with them, and they will investigate if these practices by your financial institution are right, and they will try to correct any wrong that these organizations have done. But aside from that, remember, annual credit report is where you can get your free credit report. But there's also other organizations that are around the country that provide loans for small businesses. One of them is Opportunity Fund. They have offices in the Bay Area and in LA. And they provide different types of loans for small businesses. A lot of the times they are more flexible than a bank. So they have loans for retail, if you need to find, for real estate, if you need to find a place, for a food truck, if you are into a food business, or also a small loan if you are just getting started. Kiva.org is another organization that provides also small businesses, small loans for small businesses. And I wanted to point out to the National Association of Latino Asset Builders and the National Council of La Raza and the Community Development Financial Institutions as a way that you can find organizations near you that work with small business owners. So, you know, I'm not sure where everyone is from, but I know maybe not everyone might be from San Francisco, where I know all the nonprofits, but the NALCAP and NCLR can be good places that you can go and see what's around you. There are a lot of nonprofit organizations around the US that provide small business consulting, small business workshops, that provide you with loans. So make sure that you check them out, check these two websites out. And just because it says La Raza o Latino, they don't only work with Latino business owners, but it would be a good way to get started to look for resources around your area. Another thing is the Community Development Financial Institutions, or CDFIs. These are financial institutions around the US that get federal funding to help low-income communities to build wealth. So these organizations need to go through a whole vetting process to apply for this funding. And also they're all over the US. So if you check out, if you Google CDFI or Community Development Financial Institutions, and you go to the website, they actually have a whole Excel sheet of all the organizations in the country that are CDFIs. So if you find, you know, if you don't live in California, I would recommend that you also check out that list for more organizations that are around you that can provide you with the services that you need to fund your nonprofit. And again, not only, for the most part, these organizations also have small business coaching aside from providing loans. But again, one thing to remember is to try to first start your personal credit history in order for you to be able to access some of these loans for your business. All right, and I have reached the end of my presentation. So if there are any questions, I'm gonna go ahead and open it up for questions. And also, if you have any additional questions, or if if we run out of time. My personal email address is my first name, Carla@missionassetfund.org. Make sure that you follow us through Pajarito on Twitter. And we're in San Francisco, so if you want to come by to our office and check us out, feel free to come by. But again, I'm going to go ahead and open it up for questions.
Thank you so much, Carla, for all this great information. I'm so glad that you were able to share all these wonderful resources with all of us. And I guess I do have a question. Oftentimes, a lot of folks, one of the questions I get asked is about the I-10. So in the previous webinars, as you know, I've been talking a lot about how all immigrants, regardless of legal status, can use their I-10 to pursue entrepreneurship opportunities. So can you talk to us a little bit about the I-10 and whether or not individuals can use their I-10 to build credit and get access to financial capital?
Yeah, so I think there's a lot of confusion with that, and rightly so, because technically you're not building your credit with your I-10. Your I-10 doesn't replace your Social Security when you are checking your credit report, for example. So we are credit furnishers, right? So a Mission Asset Fund sends information to the credit bureaus for you to build credit. And where we're actually sending the credit bureaus is not your I-10 to replace your Social Security number, but instead what we're doing is reporting the information with people's name, date of birth, and address. So that's why it's very important to try to have a steady address so your credit report gets reported correctly. Now, can you build credit without a Social Security? Yes, you can. Does the Social Security does the I-10 replace the Social Security? No. So just think about it in a way that sometimes that gives you the option to open checking accounts, to open credit cards, but it doesn't replace your Social Security number. So do not apply necessarily with don't say that your I-10 is your social, because then that's going to come back as that's not a social. So just be careful with how you are presenting your I-10. A lot of the banks that we work with, especially if they're credit unions, they're a lot more flexible when it comes to lending. So one thing I will say though is that not all lenders are going to look at an I-10 and let you borrow funds. So look for those partners or those nonprofits or those credit unions that are a little more flexible when it comes to the requirements for you applying for a loan with them.
Got it. And then I guess another follow-up question to that is, so you talked about getting access to your credit score with the form that we're going to send out. So in that form, in the place of the Social Security number, you said that we would leave it blank, correct? So we would not add our I-10 number on there.
Yes, don't do that. Because again, it's going to come back as like, this was not a right Social Security number, and it's just gonna confuse them. So just leave it blank, and again, they're gonna look for you based on your credit score. On your address, your name, and your date of birth.
Got it. Great, thank you. Does anyone else have any other questions? So you can feel free to add your questions on the chat box. Please take advantage of having such a great expert with us today with any questions about loans, with any questions about credit. Feel free to ask away. Anything else you want to mention in the meantime, Carla?
I think I just saw one about student loans.
Oh yes, how about student loans? Oh, that's a good question. Yes.
What do you mean though? Can you qualify for student loans with an I-10?
I think that may be related to the question. Yes. So pretty much, can immigrants, regardless of legal status, apply to student loans? Where does that fit within, within the context of immigration status?
That's a great question. I'm not that familiar with student loans, to be honest, so I don't want to provide wrong information, but I could definitely look for the answers to that and send it on the follow-up email.
Okay, that would be great. Any other questions, comments that folks would like to add on the chat box?
Okay. So what's an APR? An APR is an annual percentage rate. So what you're gonna see usually when you apply for a loan, they're gonna give you the breakdown. Okay, this is your loan, and your loan is for $1,000. So that's gonna be the principal. So the principal is the base, basically, of your loan. So that's how much my car, there's no cars for $1,000, but let's say my car is for $10,000. So that's the principal, and that is what I'm going to be paying for my bank. Now, the APR is, let's say my APR they're offering me is 3%, and that's the annual percentage rate, and that's how much I'm going to be paying for the total of the payments I'm making towards that car. So you're not getting charged 3% every year, every day on that loan, right? But there's like always like a daily interest that usually accumulates to that 3%. So when you're looking at credit cards and you're looking at other loans, that's the difference between the both of them, because there's always like a daily rate for your loans, and there's the APR, which is looking at everything that you're paying together in a year, how much is that? But usually when you're applying for your loan, it doesn't get that complicated, but if you're gonna look at the APR and see if that APR makes sense for you. One thing I wanna say aside from when you're building credit, a lot of people start with a car because they think that that's the best way to build your credit. But I will say that don't start with a car. Especially, I've seen a lot of our clients who might not have a social security number and they apply for a loan, for a car loan. They get an extremely high interest rate. And, I've seen 24% to 29%. Car loans should not be that high. They're about 2%, 3%, which is the regular interest rate that you should be having. Another thing that I will say about car loans, if you want to buy a car, you do have a window of time. This is with student loans, with car loans, and with mortgages. So you have a window of time where you can shop around. What that means is that, let's say that I applied for a car loan and I went to the dealership, and the dealership says you're gonna get a 5%, and I'm like, maybe I can get a lower interest rate somewhere else. So you have a 14-day window of time where you can shop around for a better rate. But again, this is only with cars, homes, and student loans. If you want to do that for a credit card, that doesn't work for a credit card. If you apply for a credit card today and then another one tomorrow, that's still gonna hit your credit score. So again, the thing with cars is be very careful. I wouldn't use those as credit builders if you're starting off your credit. Try to build your credit for at least 2 years before applying for a car to try to get a really affordable interest rate. And I think following up with the car question, I think Magali had a question about lowering your interest rate. Yes, that's called refinancing a loan. So if let's say that I have a car and I have a really high interest rate and I have been making really all my payments on time for about a year, you have the option of going to another lender and also asking them to lower your interest rate, or applying to refinance your loan, basically. If you want to refinance your loan, I would recommend that you first know how your credit score is going and what is your credit history and how that looks like. And after that, and then I will go ahead and shop around for that. Another thing I would recommend is check out credit unions for car loans. Usually those are the places where you can have the lowest interest rate. The same with for credit unions, a lot of people also go to the dealership first to buy a car and go through the lending process with the dealership. But actually, you can go to another lender. For example, let's say I'm going to go to my local credit union and I already have an account there. I can say, okay, I want to buy this car and it's $10,000. How much, how much is going to be my interest with you guys? So they're going to run my credit and they're going to give me a pre-approval for this loan that I just applied for. If I'm happy with this, interest rate, if I did my shopping around already, and this is the lowest interest rate that I will get, then I can go ahead and take this to the dealership, that offer, and basically I'm gonna buy the car, not through the dealership, but through my credit union, and I'm just giving the dealership the money that my credit union already let me borrow. Hope that helps, I think. I usually make drawings when I'm explaining this. Hope that helps. I think there's a couple more questions.
There's another question that was asked. What are some of the banks that you know of that offer secured cards without Social Security number?
So actually another product that I forgot to mention is some banks do have credit building loans, specifically, which are not a secure credit card, but it's more of like kind of like a lending circle that we have. But actually, for example, self-help credit union / community trust, they have two names. So if you check them out online, so it's self-help credit union, and I think we will also send their information out. I'm sending already, we can send all this information, but I'll remind Ileana, we can send this information to the website.
We'll definitely create a handout with all these great resources, and we'll that'll be included in the shared folder.
Yeah, so self-help credit union is very friendly to those that don't have a Social Security number. So I would check them out as another resource. I don't believe they have a secure credit card, but they do have a credit building loan that you are making monthly payments, and then after you pay it off, then you get the money that you have been paying towards that loan, and those payments are being reported to the credit bureaus.
Thank you. Any other questions, comments?
Sorry, and was hiding my face for a little bit. So, I mean, one thing that I will say is make sure that you understand what you're signing before you sign it. I think, from personal experience, I made that mistake of getting into a loan. Like right after I graduated, I thought that I was an adult and I knew everything about the world. But, it's really make sure that you know what you're signing and know what you are gonna end up paying. A lot of these lenders we'll look at your credit score, but also I've heard of some people that get added all this insurance, especially for cars and things like that, that you really don't need to pay for. So be careful of what else they're adding aside from, you know, the interest rate that you're paying off for your credit card. So again, you know, the Consumer Financial Protection Bureau is a great place to go for questions about some of these the different products that are available. So make sure that you check those out too. And we will send a lot of this information so you can have it handy and you can look at you know, applying for loans and applying for credit cards and all that good stuff. Another good resource is NerdWallet. They have there are private companies, so I will be a little hesitant to apply to items through them because a lot of these are paid advertisement, but they do have a lot of great articles about just how to use your money and about investing and about credit, etc. So look them up as another resource too.
And just to add to that, as part of Immigrants Rising, we are looking to create sort of some type of warehouse, you can say, where we can include resources related to accessing financial capital specifically for businesses. So we are aware that many folks may be joining us from other states outside of California. So we are trying to, in the next couple of months, compile all this information, and ultimately it will end up on our webpage, on our Immigrants Rising webpage, that will include all the recordings and additional information and resources related to all of these topics.
I have another question here.
Sure.
So where can I find my FICO score, and does annual credit report provide a FICO score? So technically, yes. Annual credit report does provide you with a FICO score if you pay for it. So be careful with that website, because sometimes I've heard people that have signed up for the monthly, you know, I think it's like $30, $35 that you pay for credit, for them to let you know if there's any issues with your credit score or things like that. So I would make sure that, I don't pay for that. There's a lot more companies that are providing a free credit score. So if you, for example, are a client with Discover, a client with Capital One, or with Bank of America, you should have access to their free credit score programs. If you don't have a credit score, a social security number, one thing I will recommend is to see if there's any organizations in your area that provide financial coaching. So for example, nonprofits in your area that provide financial coaching or financial education. A lot of these organizations do have access to checking someone's credit report. For example, here in San Francisco, we have an organization called MEDA, Mission Economic Development Agency. And they provide financial education and financial coaching. And part of their financial coaching is downloading someone's credit report and looking at that credit report with them. So I would also recommend to look for an organization, a nonprofit that already is doing that. And I will also add this to the guide, CBA, which is Consumer, sorry, I forgot the name, but they're a national organization, CBA, and a lot of organizations that pull people's credit report up, because that's part of what they do through their nonprofit. They are associated with them, so that would be a good website to check out too. If you're looking for someone, a nonprofit organization that can pull your credit report if you do not have a social security number, because a lot of the times they will be able to look up your credit report even if you don't have a social. But if you do, use the free resources like CreditWise from Capital One, Discover. Also, both of those, you don't have to be a client and you get access to your FICO score.
Great. So we have just a few minutes left for any last minute questions that anyone may have. So feel free to type anything in.
Also, if you're too shy to ask questions right now, it's okay. You can email me. Feel free to email me. Again, my email is my first name at missionassetfund.org. Make sure to send me an email if you have any follow-up questions. IDAs, unfortunately, bad news. IDAs actually got cut by the government. Yes, and that's actually a bummer because a lot of these programs are for small businesses, and that's how actually IDAs would help individuals, start their businesses and or buy a home. But unfortunately, those got cut off. So individual development accounts or IDAs. The question was if you can use those to build your credit, and unfortunately, those have been cut by this administration. So,
so they were cut altogether, like just at a federal level?
Yes.
Oh,
so
I didn't know that.
Yeah. So unfortunately, that's not available, but I'll send you information about that too.
That would be great.
Yeah.
Well, I think this is all the time we have for today. So thank you everyone who joined us today. And of course, thank you, Carla, so much for all this wonderful information. We look forward to continuing to collaborate with you and continuing to help us build additional resources and look for additional resources to keep supporting our immigrant community. So with that, again, I will send out, I'm gonna be working on the handout, and I will send out the link that will include the recording of this webinar, as well as the recordings of previous webinars and handouts as well. And of course, if you have any questions about any of the previous webinars or this one, you can email me, or you can definitely email Carla. So thank you so much for joining us, and stay tuned for our next webinars. Thank you so much. Bye, Carla. Take care.
Bye. Thank you.